Κυρίες και κύριοι, συνεχίζουμε με την επόμενη σύνδεσή μας με τις Βρυξέλλες. Θα συνομιλήσουμε με τον Επίτροπο Αρμόδιο για τα Οικονομικά, τον κύριο Paolo Gentiloni. Mr. Gentiloni, Commissioner Gentiloni, good morning from Delphi. We welcome you to the 7th Delphi Economic Forum, and we have a very strict time schedule for 20 minutes, so I will start right away. And I would like you to ask you about the ongoing war in European soil. How is this going to impact the European economy? We have short-term and long-term consequences. I would like you to describe the situation.
Well, of course, we will have an impact. We know that we entered this new crisis in a rather good footing for our European economy. So we were, in January, we were estimating a growth on average in the European Union of 4% for this year. We had a rather good situation in the labor market, a lot of savings accumulated, and perspective for investment. So the starting point before this war was quite good for our economy. The impact is difficult to estimate now, but we will have a strong impact. How strong will it be depends, in my view, from mostly three things. First, how long will the war last? Because of course we hope it will finish as soon as possible for the tragedy that is going on, but also economically the duration of the war could have a stronger impact on our economy. Second, it depends on the possibility of the dynamic of sanctions and of confrontation with Russia extending to oil and gas. And third, it could depend, and this is of course related to the second point, third point, it could depend on the evolution of inflation. We know that inflation is already quite high. In the EU it was 7.5% in March, but the energy component is extremely high. In March, energy inflation was 44.7%, and the evolution of the confrontation with Russia and of sanctions on oil and gas, and also second round effects of inflation could also influence. Overall, I think this should not bring the 2022 figures in a negative territory because of the strong carryover that we have coming from the high-level growth in 2021, but it could bring growth level at a very lower level that we estimated 3 months ago. So I will present in May 16 the new European forecast, and we will have more clarity in mid-May.
Talking about inflation, do you think there is a danger of stagflation in Europe? And I would like you to comment on the ongoing reduction of energy dependence from Russian fuel. The European Union has decided to be energetically independent. So does this risk to create a permanent inflationary pressure from the energy sector? Because the costs of energy provisions will rise.
Well, in my view, this is a normally positive move and strategy. not only because we need, from a geopolitical point of view, to build our energy independence, and we, as you know, we committed to reduce 2/3 of the dependency this year, but also because this process is parallel and mutually reinforcing with the green transition. I mean, we are talking of reducing our dependence from Russia. This is geopolitics, but we are talking of reducing our dependence from fossil fuels, so gas and energy. In this will strengthen also our green transformation. Of course, timing is essential because if this process is then to be managed in a few weeks because of the fact that the terrible evolution of the war is pushing us to further sanctions, also on oil and gas. To have this energy independence in a few weeks will be very challenging. I think we have to describe the situation as it is. So we will need not only alternative supply, but also a lot of energy saving, energy efficiency, if we want to manage this independence in a few weeks. If we will have more time, it will be, of course, less costly, but we know that peace have a cost. So if we want to support Ukraine and not to escalate war, we have also to be prepared to further sanctions.
So another thing is, how do you think this situation which evolves will affect the banking union, which is a core project for the European Union?
Well, the banking system was not very much under pressure after this new crisis. Overall, if we look to the financial crisis and the situation after the financial crisis, our banking system is in a much better situation than it was 10 years ago. Despite this two black swan momentum that we lived, first with the pandemic and second with the war in Europe. We had some consequences for 3 European banks working with Russia. We had to manage some Russian banks closure in some European countries. But overall, I think we are not very much affected. So this is the right time to make progress on the banking union, because if we look to the big strategy investments goals that we have in the coming months and years, we need a stronger banking system capable to finance companies and families in a stronger way. We all know that there are different positions among member states, but I think this is the right moment to try to bridge them, and I'm quite supportive of the effort of the president of the Eurogroup trying to build consensus on the banking union.
So another issue is the Stability Pact. Everybody's talking that we need to change the Stability Pact because it's too rigid, too strict. We cannot live with this under the circumstances. So the war makes the changes more urgent, but in the same time, it seems to me there is a consensus that, you know, we cannot change the treaties, so we cannot change radically the Stability Pact, and we have to marginally alter the situation. What is the situation that you predict will prevail? And will be any good if we don't make radical changes in the Stability Pact? Will this be enough?
This depends a lot on what you mean by radical, of course. We know that, for example, changing the thresholds that are established in the treaties, there were some proposals to change this. For example, from the ESM managing director, he was proposing to bring the threshold from 60% to 100%. But I understand the rationale of these proposals because, of course, 60% was not an economic Nobel Prize proposal. It was the average debt among those countries that signed the Maastricht treaties. And now the average debt in the euro area is around 100%. But having said this, I think that it's very difficult to imagine such a change ratified by all member states. Very difficult, and not for sure for the Commission to propose this kind of changes. But we have the need of substantial changes, addressing three issues. First, it is, of course, clear to everyone that the rule of the debt that we have now is non-implementable. So we need a more gradual and growth-friendly path of managing and reducing the debt. Second, we need more space for public investment. We need to facilitate public investment. And third, I think there is awareness of the fact that the rules of the pact have become year by year too complex, and we need ownership from member states with process more similar to the one we had with Next Generation EU, discussing member states' targets and in a simpler way, so that also the citizens can understand better where we are. I think we are making progress in the awareness of these three targets. I was very positively impressed in the last Eurogroup meeting from a paper signed by two countries that traditionally are in different positions, I mean the Netherlands and Spain. And this is another demonstration of the fact that there is a common basis, and I'm sure that before summer the Commission can make proposals to have step forward in this review of the fiscal rules.
So now there's the question, if we have some space for investment and for the reduction of debt, there are some countries like Greece, for example, and even Italy, that are over-indebted. So these countries, how will they cope with the investment needs in energy, defense, or all the other sectors that we have to develop? Do you think there is the need for the new RRF? Do we need to have a second recovery and resilience fund?
Well, I would say, first of all, we have to implement RRF, which is partially also an answer to your question. So countries with high debt, we have 7 member states with high debt, and some member states, you were rightly mentioning Greece or Italy, with a very high debt. For these countries, the implementation of the RRF is the first way to have fiscal space for investments in these difficult times. Of course, we also need, from the point of view of our mechanism of surveillance and of our rules, to understand that all member states, also member states with limited fiscal space, need to address the situation, meaning, for example, the green transition or the energy independence. We can't say that this is for countries with fiscal space, and countries with high debt will not have a green transition or an energy independence. Of course, this also means that in these countries, we need to be extremely cautious in increasing permanent current expenditure. So the exercise is to find the right balance in keeping fiscal space for investments and for growth without increasing in a permanent way current expenditure, because this could again create sustainability problem from a financing point of view. And this, of course, is something that we don't want, and it is not in the interest of these countries too.
So talking about sustainability, and in the last 3 minutes that we have left, I would like you to comment on the debt situation, because we had a rise of national debt all over Europe, and particularly concerning Greece. Are we going towards a new debt crisis? And we have made many arrangements on the Greek debt in the past, and we consider that is it sustainable? Do you think that we will have to face new measures for the sustainability of Greek debt in the near future?
Well, first of all, let me very clearly say that the Greek debt is sustainable. Second, there are several factors mitigating risks. The large share of debt which is held by lenders at low interest rates, long maturity of the Greek debt, about 22 years against an EU average of 8 years, and the low financing cost supported by the euro system, the ECB intervention. So I think that Greece has to keep momentum on reform, to implement the recovery and resilience plan, and this is also the way to keep debt sustainability. Of course, you know that this is also the basis for us to ensure a successful exit from the enhanced surveillance this year, which is something we will decide in June, but that is something we are working on.
One last question. We have 1 minute. When do you think Greece will acquire investment grade on the bonds?
Well, this is, of course, linked to rating agencies' activity. We all know that we had in recent years positive developments from this point of view, but we are not yet there, so it's difficult to predict the near future. And of course, the inflation, the war are raising new challenges. But overall, the trajectory towards investment grade is clear, and I think it's very important that the activity of the government, of my colleague and friends, Christos Staikouras, is keeping the path towards this very important target of the investment grade.
So, Commissioner Gentiloni, thank you very much for the intervention. Paragalούμε. So, that is the end of the discussion with Commissioner Gentiloni. Κυρίες και κύριοι, ευχαριστούμε. Παραδίδουμε τη σκητάλη στο επόμενο event.